At the recent Chinese Development Forum, there was one question on the minds of the top officials and business leaders attending the annual gathering. What will be the new normal for the world's biggest economy, by some measures, as it grapples with slower growth and structural imbalances? Among those attending the forum was Martin Wolf, the FT's chief economics commentator, who is with me now. Martin, when it comes to China, what do we mean by the new normal?
Well, we know what the Chinese mean. They mean, first of all, a significantly slower rate of growth than before. It used to be 10% or so, has been for 3.5 decades. They're now talking about 7 or so, possibly less, 6 or 7. It also means a real rebalancing of the economy, away from investment and reliance on exports, towards consumption, both public and private, more services, less reliance on industry, more markets. They really do talk quite a market-oriented language, with the government increasingly becoming a regulator. They talk a lot about the rule of law and the importance of the rule of law. So the new normal means quite a different sort of economy and quite a different sort of economic system.
And what sort of progress do you feel they're making towards a more consumption-based economy?
Well, the evidence we have so far is not that much, in the sense that investment still seems to be growing faster than GDP, so it's still the leading sector. The economy is growing more slowly because investment is growing more slowly, but it's not the case that consumption is growing much faster than it used to. It's also growing more slowly, though not, it hasn't declined as much as investment. So investment remains very close to half of GDP, which is an absolutely staggering figure. It remains immensely investment reliant in terms of demand, and of course it's what's generating lots of new capacity, some of it excess capacity. So I would say it's very early days. Again, similarly, in the last investment boom, a lot of it was property and construction related. There was a huge debt increase. They've stopped the rate of increase in debt, there's no question, but the deleveraging process is still at very early stage. So I would say in their transition to new normal, it's a very, very early part of the process.
Let's talk a little bit about the rule of law, which you mentioned. How much progress do you think China is making towards moving towards a proper rule of law, something that could approximate to other Asian financial centers like Hong Kong or Singapore, and how much does it matter?
Well, first of all, there's a really interesting question of what they mean by the rule of law. They certainly don't mean that the government, the court, will be subject to the law. The government will remain the Communist Party. So it's not what most of us would think of as a rule of law. They mean what sometimes is referred to as rule by law, consistent regulation in a predictable way. Now, I'm obviously not an expert on this. One would actually have to be there, live through it. But my strong impression from the people I've spoken to, Western business people and also Chinese people, is that they're really quite a long way from this. It still very much depends on connections. The intervention of the state is somewhat arbitrary and unpredictable. And I'm not at all persuaded at the moment that the obviously incredibly important anti-corruption campaign, which is a huge part of what's now going on, driven by the President Xi Jinping, is actually improving the rule of law.
When it comes to rebalancing the economy, what's at stake for the rest of us outside China?
If it becomes a less investment-intensive economy, less built around heavy, massive construction and so forth, then the demand for a lot of raw materials will just not grow the way it has been in the past. And that's going to be a very, very big deal. And the other aspect, of course, of this question of the structure is, will it be less or more export reliant? And that's one of the questions I ask in my column, because it's possible that as demand weakens at home, investment is weakening, that they might be tempted to go back to the export-led growth model. And that could be actually a source of instability to the rest of the world, with China subtracting demand effectively rather than adding to it. So the impact on the rest of the world's possibly biggest economy, certainly the fastest growing economy, the impact on what it's doing is just going to be pervasive. It's going to affect everything that goes on in the world economy. So this is, in some very fundamental way, now a China-dominated world economy.
Martin Wolf, thank you very much.
Pleasure.